Hey everybody, it's me, Gregory Mannarino, back again for another lovely segment of Markets, a Look Ahead. It is Saturday, August 11th, 2018. Wow, what a week we just had in this market. And yesterday, I've never seen anything like that before. And with regard to these markets, and I watch these things around the clock, and I mean that. I get up in the middle of the night sometimes to see what's going on here overseas with regard to everything. Currencies, debt, what their stock markets are doing. So for me to sit back and say I've never seen anything like that before, I think it's pretty profound. It was epic. This market, in my opinion, again, was played like a grand piano. And it's not just the administration here. This was played by the banks on the people of the world to start up a little bit of fear. Now, we understand the system is toxic. There's no doubt about it, and I think you are well aware of that. The machine must be fed, and fed in greater and greater amounts. It's an incredible thing. It's a monster. It's a financial Frankenstein, and it's just out of control here at so many levels. But let's just set the stage here, and then we're going to go to my website and look at some charts together so we can maybe put some of this together. Actually, I think you're going to find some of that interesting. So, what is this all about? Again, we're going to set this stage here. Number one, I explained to you in my last segment, last Saturday, it was all about the 10-year yield. They got to keep it in that sweet spot. Well, I just looked at it. The 10-year yield has moved deeper into the sweet spot. Yesterday, because of the action with regard to what happened with the sanctions and the Turkish lira plunging, and the European banks' exposure to what Turkey might be holding, and the whole thing. It's not just Turkey here. You know, they want you to focus on that one thing, but Europe is in a full-blown debt crisis, as we are here in the United States, and that's why some really unprecedented action has been taking place over the past several weeks. And that all started with the tariffs, with the trade war, again, clearing the way for the Federal Reserve to print and print and print. And then we found out that the Treasury Department is going to expand their sale of debt. Then we find out about a Space Force thing, more money that we got to borrow from the Fed. And then this thing yesterday, we hit Turkey with these sanctions right at a time where they, you wouldn't know this if you watched any of the major, Fox or CNN or MSNBC. You would know that Turkey has been in a lot of trouble with their economy. So we just hit them at the right time, send their currency into free fall. And what does that do? That shows that exposed how the European banks, they're on very shaky ground with regard to their exposure to not just Turkish debt, but all of the oversaturation of debt that exists in Europe and in the United States. The financial system, every bank is part of a chain, and it's a global thing. So if there's weakness in their banking system, it's going to exist here as well. And you actually witnessed some of that here yesterday. The financial sector got hit here. The system, people, again, is toxic. But what did that do? I think personally that it exposed, literally brought to light the issue here that we have a serious problem here. And unfortunately, the machine continues to be fed. And it's a disgusting thing. And we, unfortunately, can't be stopped. And again, I don't blame President Trump for what he's doing here. and a lot of you still believe that there's a grand plan here that President Trump is going to inflate the debt to levels that we can't believe, and then all of a sudden he's going to just throw out a plan here. Well, just so you know, President Trump has been in office as of right now 568 days, and the Federal Reserve is fully in control. Maybe I'm going to throw that into my videos here, because look, I'm not looking to put anybody down, and I know I'm going to hurt somebody's feelings out here, but 568 days, the Federal Reserve is still at the absolute forefront, the pinnacle that it's ever been, and it's going to continue that way. And mark my words, there's going to be another reason introduced to borrow more. And it's going to be brought forth by this administration here. And again, you can still believe there's a plan, but I'm going to remind you every day how many days, 568 days as of right now, President Trump has been the president, and the Federal Reserve is still at the top of the pyramid. That's the truth. All right, so here we go. Let's go to my website together. There's a link in the description of this video. We're going to look at some charts together, you and I. We're going to have all kinds of fun. Number one, you know what we're going to do? We're going to go straight down here. Let's look at my swing trading chart. This is ticker SPY, the ETF that tracks the S&P 500. As we can still see, going back to May, screaming uptrend, of course, random walk with an upward drift. Now, if you look to the extreme right here, you will see there's a nice red candlestick there. This may be a tell that this market is going to fall under pressure next week. Now, I want you to keep this in mind. Look over at that bond market chart, people. Look at the bond buying epic, almost literally off the scale. They are getting extremely desperate to prop this up. And again, the 10-year yield has fallen deeper into that sweet spot. What's the issue here? Well, I've explained to you that they can't have their cake and eat it too. By suppressing these rates, as they've been doing, like now for an entire decade, they've allowed bubbles to build everywhere. Inverse bubbles with regard to precious metals, and an epic bubble in housing, an epic bubble in the stock market, all being built on the back of the debt bubble. You all know that. Now, this suppression of rates will hurt the banks who are already insolvent. You know that. So I hope you realize there is a potential for a bail-in, which means your cash will be used to bail out the banks. We've already seen this before here. Cyprus is an example, and I'm not sure what they're going to throw at us over here with regard to Turkey, now that we found out that the IMF might, I mean, it was amazing yesterday. Market down. Then all of a sudden, there's the rumors, IMF might bail out Turkey. Well, I don't know how that would work, but the market loved just hearing that. And the market came off of its lows, the lira started climbing. I mean, it's incredible. It's really incredible, isn't it? So anyway, so there's that double-edged sword with regard to that bond market. And I believe, now look down below that bond market chart, you're going to see the dollar. That dollar is ripping higher. The stronger dollar is not good for corporations based here in the United States, American companies that are involved in international trade. So this strong dollar is not a good thing. But you can see this is the knee-jerk reaction, fear. Whenever there's fear, like yesterday, there was a lot of fear with regard to what may be happening to the European banks and the whole banking system. So there was that knee-jerk into the dollar. Gold took a hit. And, cryptocurrencies are taking a pretty substantial hit. Right now, it's... and I honestly don't even know why. Now, a lot of you have written to me. Let me just clarify this real quick. Most of you know that I dumped my cryptocurrencies last week. When I dumped it, Bitcoin was trading just over $7,000 per coin. Well, it's at $6,000 right now. That's a substantial drop. Now, understand, there was no skill on my part here. This was blind luck on my part. It's the truth. I just got fed up with the rigging. I wanted Wall Street to keep their hands off of Bitcoin. When I found out about they already have the futures exchange rigged with regard to Bitcoin. I've covered this and I'm not going to cover it again. They wanted to introduce an ETF so they can further rig it. And I said, you know what, I'm done with this. This goes against everything that Bitcoin stood for. So, you know, outside the system, decentralized. So I just dumped it, and it was just blind luck that I was able to sell it $1,000 per coin higher than it's trading right now just a few days ago. No skill at all. This required zero skill. I just got lucky, and that's the way it is, and that's the truth. So I don't want to make it sound like I was some master here with regard to, I wasn't. I did not look at the chart. I just dumped it. Anyway, let's look at a few other things here. So we understand the issue here with the bond market. I believe if these trade wars start to escalate further into the next week or so, whatever, the dollar will strengthen further. They will have to prop up those bonds more. The big issue is now that the issues with regard to the European banks is coming to light here, that they are in a lot of trouble here and their exposure to debt is off the Richter scale. Something is going to have to be done to quell that. I don't know what it's going to be, whether they're going to float out more rumors of bailouts, because that's what this is all about. Look, last time we bailed out the banks. This time we're going to bail out countries in one way or the other. You know, a lot of you are going to say, oh, there's just no way. There's no way. Well, that's what they said last time when we bailed out Wall Street. No one thought that would ever happen, but it did happen. So start dealing with what we have in front of us, not what we're speculating about, what we're thinking about, what we're hoping for, like Santa Claus, okay? This is it. I mean, look, here's the issue. I've explained to you that I believe they're going to try, by all means necessary, to keep this propped up through the midterms, which are right around the corner. So there may be some kind of an effort here, whether it's even just rumors, jawboning, whatever it is, to try to put the market at ease as to what's going on here with regard to Turkey and a possible bailout, the European banks. But you also have to think about this. What lies under all of this? Two things that people don't even talk about anymore. Collateralized debt obligations, credit default swaps. Understand, all of this debt is insured through these mechanisms, credit default swaps. Collateralized debt obligations are a whole other animal where financial instruments are kind of put together to make them look very attractive. Then all of a sudden, what they do is they chop these up into little, they're called tranches, and they sell them off. And it looks appealing to whoever's on the other side buying these products. It's an insane thing. This is exactly what brought us down last time. But we're not even talking about collateralized debt obligations. The credit default swaps that are the main issue here. I don't know a way around that. Again, this stuff is insured. Who insures it? You do. And why is it you? Look what happened last time. We bailed out Wall Street. When those credit default swaps started kicking in, and it was revealed that every single bank was insuring what another bank was doing. We couldn't allow them to have to pay for their commitment. I mean, they all obviously collected an enormous profits off of these offerings of credit default swaps. But you paid for it. So did I. And that's exactly what's going to happen here again. So when you hear a credit default swap, understand that's your exposure. That's we know this because we've seen it before, and that's part of the setup here, people. Bailouts. We have one round of bailouts, and I also explained to you that these trade wars, there's only degrees of losing here. There's not going to be any winner. That's the truth. Any potential pain that any of these corporations is going to potentially suffer will be passed on to us. We'll have to start paying more for everything. You want to talk about a charade? Let's talk about this real quick. Monsanto just got hit with a $289 million penalty or a fine with regard to Roundup and how it was harming people. I can tell you this, Monsanto is laughing their freaking asses off. As of 2015, over $4.6 billion in profits from mostly Roundup. Revenue, $1.9 billion in profit. So they're laughing at this. This is a joke. This is the cost of business. Corporations will never lose. I'm sorry if that hurts your feelings, but that's the truth. It's the reality. This whole system is rigged against you. Let's look at some more charts here. I'm sorry I'm getting so sidetracked. So I want, let's do this here. Let's look. See what it says SPY on my swing trading chart? Well, let's put in XLF. XLF is the financial sector ETF. This looks like it's about to take a hit. I actually took up a credit spread against JP Morgan. I posted up the position exactly how I took it up on Facebook, right off of my trading sheet. Trade went through, took a snapshot, I posted it. So if you want to see it, just go over there and look at it on Twitter, Facebook. I forgot where else I posted it, but I post all my stuff like that on Twitter. So if you're not following me on Twitter, please do so. Financial sector looking pretty grim here for the reasons we covered. They continue to suppress rates. Banks are going to suffer. There's no doubt about it. We already understand that we are in a global debt crisis, although, again, you wouldn't know that if you watch Fox, CNN, or MSNBC. Turn that crap off. It's the truth. It's insane. Now, let's go down lower here and look at the technical analysis for SPX. SPX. This is the S&P 500. It's still showing here a weak buy signal. This is a weekly take on it. I wouldn't be buying here. I would want to see how this plays out. I want to see what they do. Moving into next week, we're trying to maybe quell the market, putting it at ease that, don't worry about what's going on here in Turkey. Don't worry about what's going on with the European banks. The IMF is going to back it up, which means you are going to bail them out too. Where do they get their funding from? They get it from our central banks, which means they get it from you. Isn't that awesome? What a setup. I mean, it's a win-win. They can't possibly lose. There are some people out here that believe the IMF is insolvent. How could the IMF be insolvent? Well, first of all, in reality, they are insolvent. This whole system is insolvent. Central banks, our banks, your bank, where you keep your cash, they're insolvent too. But they have a printing press. And they can print this stuff out of thin air until kingdom come. And you're going to back it up. So just be aware of that. And nothing's going to be done about it. President Trump isn't going to fix it. And no one's going to fix it. The system cannot be fixed. The system is toxic. All right. We can look at a few more things. Let's go to my swing trading chart. Let's put in GLD. This is gold. Paper gold. It's not even real. I don't even know how they can make a chart of it, but they do. Look at this. Now look. I know this is getting kind of long-winded, but let's just cover a few things that took place last time before the meltdown. We were having trouble in the banking sector. There were rumors of it. Nothing. The market didn't seem to believe anything was going on. Housing was in an epic bubble, just like it is now. Housing prices actually started to come down. We just found out yesterday. Home affordability is at a 10-year low, a decade low. But our economy is booming. This is as good as it gets. This is our president. I'm not putting him down, but these are his words. A lot of similarities here between what happened the last time. Knee-jerk reaction into the dollar, pressure on gold. These were also going on at that time. Then all of a sudden it just reversed. Why would it reverse? Because gold and silver are unbelievably suppressed. Their price action is not real. There is no price discovery mechanism whatsoever. As a matter of fact, I will go as far as to say this entire market, there's no way to gauge what it's worth because the debt market is being obviously rigged beyond the point of being able to even dream about it or think about it. It's just seriously beyond belief. So being that everything derives value from what's going on in the debt market, how could the price action of any one asset be real? There is none. There's no price discovery mechanism behind this market. It's 100% fake. It's 100% rigged. And that's how you can tell that this whole thing is going to correct to a fair value. And it's going to be beyond the point of belief. And it's a very frightening prospect, but it's the truth here. And most people, because they're watching Fox, because they're watching CNN, because they're watching MSNBC, are going to be caught absolutely off guard. They're clueless. And all of them, all three of these major networks are there for a distraction. Look here, look here. Don't look here. All right, I could go on and on probably for all day with this, but I think I touched on some important things. Let's see where this goes. So let's just summarize. Where's the market going next week? I think that's the big thing here. It all depends. Right now, last week I said it was all about the 10-year yield, which it is to a large degree, but a lot of it has to do with what they're going to do or how they're going to spin the European debt crisis that we are in here and the debt crisis we're here in the United States, which nobody knows about. But it's here, it exists, the proof is right in front of us. The fact that we have to, do what we're doing, what President Trump is doing right now, again, not putting him down, it could be anybody sitting in that White House, just happens to be him. But every action he has taken has brought the Federal Reserve once again to the top of that pyramid, and it will remain there for his entire presidency. And I will count this down just to prove the point. With that said, I will, believe it or not, I'll see you Monday morning.